Hi, I'm Kevin Castaneda. In this Kev's Mindset, we talk everything finance, investing, mindset, and productivity. And in this video, we're going to be talking about why the stock market keeps flip-flopping, why the S&P just goes down very momentary and then it flies right back up, and all tech stocks just bounce right back. So we're going to talk about all that in this video. So if you do enjoy, go ahead and smash the like button. It really helps out the channel and helps out this video in general. Also, go ahead and subscribe if you do want to watch more of my content in the future, and sign up with the public down below if you want to get up to $70 of stock of your choice just for signing up. So go ahead and do that, and now let's head straight into the video. Okay, so tech, and I'll talk about big tech as a whole because that's generally what a lot of my portfolio holds, and I think that's really important to talk about because big tech kind of runs the market right now. So big tech kind of we've been seeing a lot of days. We saw last Monday and we saw this Monday where we see a drop in S&P and a drop in big tech, just very brief, and then right after it flies right back up. Now we're going to be talking about why this happens and why we don't see a substantial dip that lasts a good amount of time like we did in March and April. And the reason for this is honestly very simple. It's because investors have a lot of cash, banks have a lot of cash, consumers have a lot of cash, investors have a lot of cash. And when we're like this, and when corporations also have a lot of cash, when we look at a market like this, the problem with that is stocks go down and people immediately want to buy the dip because people have gotten used to that from March, April, and from 2020 and from the past. And so people look at these stocks that they think are at a relatively good value, and now they're even cheaper. And even though it's only by a little bit, people are like, okay, I might as well buy the dip now because it's probably not going to last too long. So people buy up the dip really, really fast, and since they buy up the dip really, really fast, we don't get a long-lasting dip because a lot of cash flows into these stocks right away, and that causes them to bounce right back up to where they were, or really close to right back where they were. And this is important for us to note, as this bounce makes it a little bit difficult to build out these positions any heavier, and that kind of sucks if you're trying to build out a position and you're getting a new position and you buy in on a dip, then it bounces up right away and then you have to wait for another one, just for a very brief one again. And yeah, it's tough for that, but it's also really good because we see our returns and we're like, okay, we rally, and now we kind of know how this market works. We know this past few weeks, last Monday, this Monday, now we're seeing, okay, this is what's going on in the market. The market goes down really quickly and then it bounces right back to where it was. So, and I don't think that this is indefinite, and I'm sure that maybe one day we will see a actual drop for a good amount of time, but we had large catalysts to see a genuine drop and we haven't seen it. And all this cash that's sitting on the sidelines just pours right into these assets right as they dip down. And the reason for this is not only because there's a lot of cash, but because there's no alternatives. Cryptos are rallying, and when stocks drops, maybe some people take it out of crypto to put it in stocks, and then people have some cash on hand and they put it in crypto because crypto dropped, and now they're both at normal levels again. And then maybe they rally a little bit and then dip off and people buy it again, and it continues to happen. Or real estate's still quite high. It's finally starting to settle down a little bit, and we're kind of starting to see reductions in the prices and stuff. So I guess real estate isn't a really liquidable asset. So with that, we're just between stocks and crypto, and I hope not NFTs. But we're looking at these asset classes and we're like, okay, these asset classes drop for a tiny bit of time and then they bounce right back. And we're kind of in this flip-flop type market. And I think that this is gonna last for a little while because I think that we're still living in this Fugazi kind of propped up market. And I think that while we live in this, I think people are gonna continue to play the game the way it's being played. And no one's gonna sit there on the sidelines and watch it drop a little bit and then bounce back, and then watch it drop a little bit and bounce back and not get in on those little dips. Eventually people get the gist of it and they start buying in on those little dips, and that causes it to bounce even more right after those little dips. And I think that that's causing the market as a whole to realize, okay, we're not going to get these huge dips that we did in March and April, or at least for now until we get a big negative catalyst, which we haven't seen. And even when we saw Evergrande and the deadline for the government and all of these things going on, the Fed speaking, we only dropped 3-4% in the S&P, and then we bounced right back and ended the day not even that bad, which is kind of incredible for us to see. And that plays into the strategy that I'm implementing. Whenever I see the S&P drop a little bit or my stocks drop a little bit, I buy in little bits, and I'm just dollar cost averaging in. And if I see a large drop, then I'm even more excited to buy in because it's a nice discount for my stocks that I haven't seen since March or April. And so I think we're just kind of living in this market right now where we're kind of flip-flop. flop. Is going to change? I think it will. I'm not sure what will cause that change. Maybe it'll change because stocks just don't dip anymore. We just fly up again because of something. Or maybe stocks start to dip more substantially and they dip over periods of time instead of a quick flash drop and then buy right back, maybe because of some sort of negative catalyst that is going to persist. So we'll see what goes on. I just wanted to talk about why this market keeps flip-flopping so you guys get some insights and understand why this is going on. Let me know what you think in the comment section down below. Also, go ahead and smash the like button if you did enjoy this video, and subscribe if you do want to watch more of my content in the future. Thank you so much for watching up to this point. I'll see you in the next one. This was Kev's Mindset.